Welcome back. I'm Wyatt Goolsby in for Lauren Ashburn. U.S. stocks opened sharply higher during morning trading, then fell back down again. This comes after a week-long sell-off with dramatic drops of more than 1,000 points. Economists call this a correction, or a drop of 10% or more. It has left many Americans worried about their finances. Joining us now is Desmond Lachman, an economist at AEI, the American Enterprise Institute. Previously, he was at the International Monetary Fund and has also worked on Wall Street. Welcome to the program, Desmond. You say it's no surprise the financial markets have been going down over the past couple of days. It's probably a surprise to a lot of people. Why has it not surprised you?
The Fed's very easy money policy over the past 5 years or so has really led to an incredible increase in stock prices. So it really was only a matter of time before you'd get some sort of serious correction.
And of course, a lot of people start worrying about it. They wonder if they should pull their money out of the stock market. What does all of this mean, do you think, for the market and for investors?
Well, it's difficult to know what individual investors should do, but one thing they should really prepare themselves for is that the Federal Reserve is going to have to raise interest rates over the next year or so if they're to prevent inflation. And generally, that means equity prices that will be less buoyant than they previously were.
So, Desmond, how much credit or blame does the president deserve for what's been happening in the stock market?
The president doesn't deserve much blame, nor does he deserve much credit for what's happening in the stock market. What happens in the stock market is largely determined by the Federal Reserve's very easy money policy, keeping interest rates low, encouraging investors to take risk. That is what explained the very big increase in stock prices during the Obama years. It's explained much of the increase in stock prices during Trump's first year in office. Of course, the tax cut helped as well. That provided an added impetus to stock prices. The president made a mistake to take all of the credit for the increase in prices, because now with prices going down, he's going to have to take the blame when this is something that is very much beyond his control. This is something more that is determined by what monetary policy is, what's going on with the budget. He doesn't have direct control over those matters, so he's really giving himself hostage to fortune by wanting his performance to be judged on how the stock market is doing.
I want to shift gears now more domestically to the federal deficit. Some Republicans are worried about the budget being saddled with future generations with crippling debt. What are your thoughts? How can lawmakers make sure that doesn't happen, or is it just inevitable?
I would say that the train has already left the station, is that we had a tax cut, which instead of being a tax reform that would have adequately funded the tax cuts, what we did is we had an unfunded tax cut that official estimates, Congressional Budget Office estimates that this will add something like $1.5 trillion to the debt over the next decade. So that was not really something to be welcomed. And now, in order to keep the government going, we've just had Congress arriving at some sort of compromise where we're going to have additional government spending. So all of this means that our deficit and our debt levels, they're going to rise, and that is problematic for future generations, because it's going to be the future generations who are going to have to pay off the debt with which we've saddled them.
And no doubt this will be one of many important topics talked about during the upcoming midterm elections as well. Desmond Lachman, an economist at the American Enterprise Institute, thanks so much for talking with us.
Thanks for having me on your show.